Well, if you are tired of sticker shock when it comes to your car insurance bill, you're definitely not alone. Premiums have shot up a whopping 30% in the last few years. That comes out to about $600.
New Jersey is among the states where rates are rising the fastest. Consumer reporter Josh Sidorowicz is in your corner with some tips on how you can pay less for your car insurance.
We all want that.
Yes, please.
It is so frustrating for so many drivers right now. I mean, so far this year, rates have already increased about another 8% on average. And so that means a typical driver is now paying more than $2,600 a year for insurance. But you can take action to save money.
When you factor in crashes and lawsuits, more natural disasters, tariffs even, and the rising costs for repairs and parts, it all adds up to pricier premiums, which means it always pays to shop around. AARP says not all insurers rate risk the same way. The same driver could see rates vary by hundreds of dollars depending on the company, so get quotes from at least 3. Or try raising your policy's deductible, what you have to pay out of pocket before insurance kicks in. Even an increase of a few $100 could lower costs by 15 to 30%, according to the Insurance Information Institute. If you don't mind being tracked, many insurance companies now offer a discount if you let them monitor your driving habits. Just be sure you know how they plan to use your data. And finally, consider whether you're paying for coverage you really just don't need anymore. If you drive an older vehicle that's not worth as much, it could make sense to drop your comprehensive or collision coverage. Consumer Reports found that alone could save you $1,000 or more a year.
And don't overlook some of these other potential ways to save too. Something as simple as putting your bill on auto pay. That could help you cut costs. Paying the entire year up front, that can also get you a discount. If you're interested, if you're retired or you're working from home or for whatever reason you're just not driving as much, you can also look into low mileage discounts. And then here's one that you might not think about. Improve your credit score. That's because insurance companies, they factor that into your rate, and a lot of people don't realize that.
You know, one of the biggest costs, teen drivers.
Yes. I don't know about that, but I hear they are a real drag on your budget.
I remember being one for my parents, yes.
Well, look, I would say when it comes to that, a lot of the same kind of advice applies here. You know, you're going to want to shop around because some carriers do offer better rates than others for teens. Some carriers, they do also have like a good student discount, so good grades will equal better rates. And then, don't forget too that once your teen does go off to college, then you want to take them off your policy and save if they're not driving your car regularly too. So something to keep in mind.
Oh, boy.
But look, I mean, all of these things, you got to weigh your options, right? So if you're going to raise your deductible, do you have enough then to pay out of pocket if you do need something? With your comprehensive coverage, that's obviously only if you've got an older vehicle that's worth less than whatever the coverage would cost. So all these different things to weigh, and it's always fun, as you know, to go through all this.
Good
Do
advice.
your research.
Thank you, Josh.
Okay, thanks, Josh.
Yeah.
And you can contact Josh by filling out our consumer complaint form. Go ahead, scan that QR code you see on your screen right now, or head to cvsphiladelphia.com/inyourcorner.